Welcome back to The Explainer. Today, we're taking a look at the stock market for February 2026. And, on the surface, things looked pretty good. But when you start to peel back the layers, well, you find this really fascinating story. A tale of two markets, really, where the big headlines just aren't telling you everything. So take a look at the numbers. At first glance, everything looked great. February 24th, the S&P 500, the NASDAQ, the Dow, all of them finished solidly in the green. And, that's usually the kind of thing you see when the market's feeling healthy and confident. But is that the whole story? That's the real question, right? Do these big, flashy numbers actually show what's going on underneath the hood? And this is where it gets super interesting, because hiding behind all that green is a huge split, a kind of market of haves and have-nots. All right, so let's get into it. The market isn't moving as one big happy family. No way. It's being split right down the middle by one incredibly powerful force, artificial intelligence. And this isn't just some niche sector story anymore. This is the story driving everything. Yeah, we're in a totally new environment here. Think of it like this. On one side, you've got your AI winners. These are the companies right at the center of the AI revolution, and their stocks are just rocketing upwards. But then, on the other side, you've got companies in sectors that are getting disrupted by AI, and they're really falling behind, even while the rest of the market seems to be climbing. And if you want proof, just look at this number, -32%. That's a huge drop, and it's how much the S&P 500's software industry is down from its recent peak. That's a stunning decline, and it just goes to show how real this AI disruption is, even for big established tech companies that aren't on the cutting edge of AI. This quote from Steve Jobs just nails it. He said it years ago, but it's never been more on the money. Right now, AI is that innovation. It's the big thing separating the leaders from the followers. And you can see it plain as day in how investors are putting their money to work. Okay, to really understand this whole AI divide, you've got to zoom in on the company that's right at the heart of it all, the epicenter of this earthquake, NVIDIA. Seriously, what's happening with them tells you so much about what's reshaping the entire market. Get this. 84%. Just think about that for a second. That's the jump in NVIDIA's latest quarterly operating income, year over year. They didn't just meet what Wall Street was expecting. They blew right past it. And it's all because of this crazy, insatiable demand for their AI chips. But hey, this isn't just about NVIDIA. Not at all. We're talking about 306 different companies in the S&P 500 that brought up AI on their latest earnings calls. That tells you just how massive this revolution is getting. It's touching pretty much every part of the economy now. Now, of course, when you see that kind of unbelievable growth, it creates new problems, or at least new questions. As Charles Lewis Sizemore points out here, having too much of your portfolio in any one stock, even a superstar like NVIDIA, is a big risk. So for investors who've made a ton of money on this, the game now shifts to strategy, to smart risk management. So that brings up a big question. Is this whole AI boom just a bubble waiting to pop, or is it actually built on something solid? To figure that out, we've got to pull back the camera and look at the broader economy. And you know what? That foundation is looking pretty strong. The U.S. economy, it grew at a 4.4% annualized pace back in Q3 of 2025. That is the fastest growth we've seen for GDP in 2 years. So there's a really strong economic runway here. And at the same time, things are looking better on the inflation front too. Consumer prices were up 2.7% in December from the year before. That's a cooling trend, and that takes a lot of pressure off of everybody, consumers, businesses, and definitely the Fed. Speaking of the Fed, they've helped create a more stable picture too. They held interest rates steady back in January, which basically means they've hit the pause button on hikes for now, and that gives the market some predictability, which it loves.
Okay, and this is where it all comes together. Federal Reserve Governor Stephen Miron actually called AI profoundly disinflationary. That is a massive statement coming from someone at the Fed. You've got top officials now saying that this very same technology that's splitting the market could actually help us fight inflation. Wild, right?
So what does all of this mean for you? Well, the most important thing to get is that this is not one of those markets where a rising tide lifts all boats. Nope. The old playbook of just buying an index fund and calling it a day, that might not cut it anymore. So let's break down the big takeaways here. First off, 2026 is really looking like a true stock picker's market. That means you've got to do your homework on individual companies. It matters more than ever. You really need to understand how AI is affecting different sectors because, as we've seen, those big market averages can totally hide some major weakness just below the surface.
And really, that's the question to leave you with. In a market being totally reshaped by AI, are you an active investor or are you just a spectator? Because as this thing continues to unfold, just watching the headlines isn't going to be enough. It's understanding these deeper currents that really makes all the difference.